Okay, so supply and demand, the way we are taught in SMC, you just have some break of structure, right? Simple break of structure, and you want to find some OB, put a limit on it, and take a trade, sell or buy. But in reality, it doesn't really work like that. If you do this, your win rate is crazy low, and we already talked about this last call. So I'll just tell you right now that finding a correct POI that will give you a swing trade or a swing buy or swing sell or a big reaction is almost impossible to do consistently. But we'll have confluences, and of course, the reason for it is if you just mark a POI like this on the left, it's you just finish like 50% of the game, right? But what we are gonna be focused mostly is how price approaching that POI. So that's something to prepare you for future. So first of all, I would like you to see supply and demand based on structure. So the structure that I showed you last call. So for example, here we have a break of structure. Now we'll see every range as a buy to sell and sell to buy, right? So default definition for demand, we have some sort of accumulation, then price manipulates, and then we have a sell to buy. The reason this happens is there are institutions in the market and there are settlements within them. And they're not trading CFD, they're trading futures. They already have price and time that they have a deal on. So for example, me and some guy here have a bank and we have a deal. He's gonna sell me the orders. Let's say you want to sell me 100 trillion from here to here. So when price gets here, he will close the sell and buy 100 trillion from me. So that's the deal, right? And of course, price, he cannot just sell 100 trillion right away during that day and push price to the desired price level. The reason for that is we don't have enough liquidity. Of course, we can just fill every single buy order here and push price lower. But if we do that, we will lose money. And the idea of trading and the reason why institutions trade is just to maintain the money flow, right? They just want to preserve their capital. Not to make much money, not to lose much. So because of that, we always see some sort of huge liquidity sweep on high time frame. Then we have a sell to buy, and let's say our objective is here, right? But because of lack of liquidity, we have to create order flow and start stacking orders slowly. So let's say this is our goal. This is the 100 of whatever, and we can just open, let's say 10% of it. So let's, or 20% of it. So let's say $20 trillion. We open right here. We accumulate, we induce some people. Price can look also like this. This is one of the most common reversals. You have some sort of build up. You induce them, right? So everyone is seeing this as a change of trend. You trap them and then you sell. So you induce people to buy this move, right? It breaks structures. Everyone is taking buys. You take them out, and all of those buyers become sells. So that's why it's called sell side liquidity. And you can basically say this move right here is funding our main buy. And all liquidity in this move, let's say there was 10 trillion, all the 10 trillion here is moving here and funding this move right here. So we can now afford to open most of our positions in good pricing, right? Instead of just pressing a buy button and pushing the price to the space and losing hard. Those late trades will be in heavy drawdown later on. And just like this, price will just break structure, create some liquidity, manipulate the liquidity, get to extreme pricing or good pricing, and start stacking up orders. So 20, then we get another 20 trillion, and we'll do this till we get 100, and it will be distributed perfectly till our next, for us, in technical perspective, it will be, I'll call this high time frame objective. High time frame objective can be liquidity, can be FEG fill, can be inefficiency fill, can be money transfer, all of it. And we'll get to that later. So this is the idea and my view and how I'll use this as narrative for trading. Also, when price reaches that level, so we are buying, and when we close, we are becoming sellers. So we need buy side liquidity. And that's why you'll see most of the reversal, 90% of the reversals, they either take some sort of liquidity on the left, or they will create liquidity, buy side liquidity. And the simple reason for that is when we take out the trade, when we close the trade that is in profit in the market, we are taking liquidity from the market, right? When you hit a stop loss, you're giving money to the market. So closing the trade also requires liquidity. And for this reason, you'll see most of the time when price reverses, we need some buy side liquidity. If we don't have buy side liquidity, we'll create it. So you can imagine something like, okay, something like this. We again build up, we induce people, we trap people. So all the sell side is here. Right? And when we take this out, this whole move is becoming liquidity that is funding our next move. And again, we reach our higher time frame objective, and we have another settlement, another deal with whoever, and our objective is somewhere lower. And we will start stacking up orders the same way. We'll close the order the same way too, have some sort of stop hunt or create liquidity for the next move. And that's why price is moving basically from one liquidity pool to another. So as I said at the beginning, we want to see market as buy to sell and sell to buy. Before we move to efficiency, we'll just go through some conditions for our valid supply and demands. Usually you just want to trade it within your trend. So if, for example, when can we confirm our trend? When we reach a high level objective, we can anticipate that, okay, so let's say this is a weekly objective, right? We don't know if it's going to be a weekly downtrend or weekly pullback, but what we know for sure that it will be one of those, and both of those are what? A downtrend on H4, daily H1, right? So that's how we anticipate a change of trends. And if it's a downtrend on H4, then we can start looking for valid supplies. But you will never use it counter trend. So if you're bearish, you will never look for POIs like this. Okay, that's the rookie mistake. Because when price moving counter trend, all of those become liquidity, and it will just be levels for a pullback, not for trading. Okay, so this, and for a valid supply, you have few conditions, but it's simple. This simple SMC. So order flow, meaning pro trend, has taken liquidity or has liquidity. So in this case, it can be any liquidity, right? Anything, you know, it can be equal high, equal low, it can be even objective liquidity, some of you know, whatever. Just one of those is enough, and it has broken structure. Then of course you can have some inefficiency, but I think that's a bonus. I don't really follow these rules religiously, but for some newbies, this can be a good way to get yourself oriented. And now, I don't have many types of supply and demands, but the only thing I want you guys to remember is rally-based drop and drop-based rally. You know, there are many ways for transactions. There are point transactions, simple transactions within structures, but I won't teach that. All I want you to know is if you have a rally up like this and you have some sort of consolidation, you can see buy to sell and sell to buy within wicks or within structure. It will become a sell to buy, right? Sell to buy, buy to sell. And all you have to know is there's inefficiency before and after. And this will be a block of money, basically. So in future, you can use those for money transfer. But we'll get enough of examples of that later on. So first concept we have here is gonna be efficiency. And for that, we are gonna follow objective structure. So we have IPA and EPA. And it will basically be an indicator for us to take a trade or not take a trade, right? Fractal. Okay, if you have questions, just open your mic and ask me. So how will this work? First of all, the diagram is simple. EPA is when we break two structures and the structures are connecting. So you have one break of structure, two break of structures. You can say this is efficient price action. And what this means for you is this range from this high, from this high to this low is your valid trading range. And what it means is you know that you can take a trade here, that there is a possibility of price doing this and going, or manipulating this and going. But this guy should be safe for you to trade, right? So here you would ask yourself, can you take a trade? Can trade. IPA is the same. You have two breakout structures, or even one is enough, but the ranges are not connecting, right? So you have this rebalance. If price comes back, you can say price is balanced and the orders are stuck in good pricing and price can just tap and go. But in this case, this will automatically become your trap. Of course, sometimes you can see prices dropping. It doesn't tap, it doesn't mitigate anything, and then it just randomly mitigates this and goes. But if that happens, then you know it is what it is. You miss the move, but there's no valid trade in that leg. All you can do is you wait for another break of structure. You make sure this guy was mitigated, the range was mitigated, and then you can start watching this as your next range to trade. Right? So it's simple price action. Go to daily. Can I play? This is fine. Okay, so you follow objective structure. First to mark this low, this high, this low, this high. If you have problem with seeing structure, you can just see it like this instead. I recommend drawing it as a diagram. So you have this pullback, right? This push that broke the structure. Price came back and broke structure again. Price tried to come back and broke structure. Then you can just turn off the chart and you see this. So we can all agree that price rebalanced the previous range. This is our valid range to trade from this low to this high. At the beginning, I said you want to see supply and demand as ranges. So for now, you don't look for OBs, you don't look for POIs. All you can say is this is your valid supply and this is your marketplace.
Mylan, just on that, do you need it to mitigate to the 50% of the previous range, or can it just literally tap the bottom of it or top of it?
Yeah, if it taps to the 50%, it can be an indicator that this high is safe for you to trade.
Okay.
But now it's whatever market does, you follow it. So price can do this, tap into just slightly rebalances and go. Price can go to extreme and go. Price can even manipulate this and go. And all this will be based on what price action offers us here on lower time frame. Right? So if you trade this, for now we won't think much about entries yet, but we know this is our rebalance level, and that's all. Then price comes, you see price doesn't rebalance here. So this becomes a trap automatically, and we are inefficient, right? So you expect this to be manipulated, and then price starts selling. Some people are getting induced, they're getting in sells. You have a stop hunt, we rebalance, and then you just look for low time frame entry. I'll try H1 to see if there's something. Yeah, there is. I'm gonna reanalyze this. Yeah. So for example here, after that, after you touch into that high time frame objective, which in this case would be rebalance, you can go to H1 and you can treat this the same way. You have a break of structure, break of structure, break of structure, and you see we broke two structures and we mitigated. So this would be your next level for rebalance, and this leg from this low to this high would be a valid leg for you to trade, right? To catch the sell, and then you can again hop to lower time frame and have something like this. Press break structure. For now, we won't trade this because you cannot recognize if it's a valid break or not, or if it's going to be a fake break of structure and then real break of structure. So for now, all you have to do is you wait for two break of structures, you make sure price is efficient, and then you take the sell. So how you'd use it in real time? I'll draw a simple chart. You have this. Wait, am I recording even? Oh, I'm. So you have this. Imagine this is like H4. Yeah. High, low, high, low. Something like this on H4. So high time frame. And in future, you'll understand every reversal or 90% of reversals. It will always tap into something on the same time frame or higher time frame. So we tap into something here. Red lines are high time frame objectives. This can be, let's say, from here. This can be a stop hunt. And yeah. So every time you tap into that, you can either wait for a direct reversal, which would mean we will have some reversal patterns and you'll try to catch the trade at the top of the move or at the bottom of the move, which of course is riskier way to trade. Or you can just trade simple continuation, for which you would use IP and EPA. So then you zoom into this leg sample and you trade this on M15. If you trade H4, I recommend M15 as your entry time frame. So you'll have something like this. Price makes a fake choke, induces them key pause, break. So this is still not efficient, but it's a strong high. You can trade this directly, or you can wait for another one, which confirms efficiency, and you can take the trade. Yeah. And this you can do at every like here, 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 here. So let's go through some examples. So what I would recommend, you go to H4, simple chart, and you start getting back the big moves on H4. Like this move is fine, this move is fine, this, like almost and check M15. So most recent one we had is, let's say this was higher time frame objective. It was some liquidity on H4. You don't need to bother for now, but you can hop into here.
Mylan, just on the high time frame objective stuff, do you have an inclination of where that may be, or do you just wait for your lower time frame confirmations after a liquidity pool has been taken?
What was the question again?
Do you often know what the higher time frame objective is, or do you just sort of mark out?
Or if I knew, it would be too easy.
No, I know that,
But
but
you
I
can
mean,
anticipate.
is there sort of like, but they're sort of signs where you're like, these ones are, you've got a high probability, or you think it's a better chance than others, and how do you identify those?
Oh yeah, of course. Higher time frame objective and bias are two only things that are gonna be a bit subjective in
Okay,
our whole training plan. But I'll show you everything.
perfect.
And
Thanks,
then
mate.
it will just be based on your experience over a few months. But it is either a rebalance or liquidity. There's nothing else. Then you just have to identify the correct liquidity or the correct inefficiency. So which is not that hard.
Perfect.
Yeah, so for
Good,
now,
mate.
let's say this is our liquidity taken out. We can go to M15 and trade our M15, right? And this is how I was stacking cells during this week on November, last week of November. So first of all, you can take a direct reversal, which would be a reversal MSU for some of those who know. FBOS, if you follow structure correctly, this is high. Okay. This is high, low, high, low, high, low. We already had reversal MSU here, but it didn't have it to our objective yet. So it's not valid. It would just be a continuation buy, right? Then you had high, low, high, low, high. We break the low and we start inducing people to sell. So this is FBOS, inducement, and you can sell after on M15. If you trade M1 here, you would burn your account. So our choice is either trade this or trade continuation. So we have a key break of structure, and now we can trade EPA. So if price comes back now and breaks again, we can start taking trades. We break, we rebalance, so we can take this trade, right? Technically speaking, if there's confirmation and you just put your stop loss above and you follow, price breaks again. We are efficient again, right? You see the ranges are connecting and we can take a trade here again. Our valid trading range is from this low to this high. So what can price do? Price can go here, give you some confirmation and sell, or price can manipulate this, which would mean this is what? An MSU, right? But the previous high should still be protected. So let's see. Price comes back, doesn't really show any sign of bearishness. Then it takes the high. But it should still respect this. Okay, it was taken out here, but in real time it wasn't. I don't know why FXCM changes the data, but before it was like here, one piclet below. Doesn't matter. And that's how you basically trade this move. One trade, two trades. After this, if price breaks out of this higher time frame, what do you think we're gonna do? Let's say Josh. Is your name Josh? Yeah, Josh. Perfect. Do you think we would stay on M15, or do you think we would decrease or increase time frame? Like when we break out of here?
I would increase time frame.
Of course. So now instead of trading M15 delivery, you trade H1 or H4. If you go to H4, there's no information for you, right? The only information you have is that this is external structure, and all you want to see is price coming back, forming some structure, and go. And then it will be EPA on H4. But in real time, for now, it's useless. So you can go to H1 and see what's happening. If you trade M15 here, it's too fractal for the whole move, right? Remember, this is like H1 daily move, H4 daily move. So if you trade M15 here, there will be manipulations that are gonna just sweep M15 out, right? So if you follow everything correctly here, and you stay on lower time frame, all you can see is, okay, inefficiency, price breaks, we rebalance, break again, and we're efficient. And you try to take a sell here or a sell here. And you get stopped out. If you trade H1 and you check all time frames, H4, H1, you see there's inefficiency above, and we just took out some liquidity. So at least the pullback is expected and you don't get manipulated. Then you also see you have FBOS, inducement, and you can take a sell if it's possible on lower time frame. Or you can just wait for one break of structure. In this case, we still have inefficiency above, and we still didn't form efficiency. So price can still go higher, take this guy out, and create H4 efficiency, right? Or price can just mitigate this and go. And we create efficiency since we have 2 breaks now. So let's see what's happening. Okay, price breaks and bam. So we are efficient now. And our valid trading range is from this low to this high now. This high can still be manipulated, but we can already start looking for trades in this leg. Price comes back, sell, price comes back, sell, right? And I'll show you some trade examples as well. So price comes back again, we break again. So now, what does it mean for us? It means the valid trading leg is moving from here to here. And this high can still be manipulated. The pricing of the rebalance also matters. There's a big difference if the rebalance looks like this or if it looks like this, like we have now, right? It's just support resistance retest. The deeper the mitigation is of the range, the higher probability of this holding. So in this case, I would just anticipate this guy being taken out. If it doesn't, of course, we just miss the move and we trade next efficiency. But if it does, then we have a nice entry. So price takes it out. Now you can execute a trade on 1 hour, meaning you wait for a bearish candle on 1 hour to close, or you can just hop to M15 and trade what we know. So you see there are wicks, there are sell to buys, mitigating deeply here. There can be some order flow, but that's not important. All we have to watch is this. So okay, so we create a low, a high, a low, a high, a low. We break that low. Okay, nothing is happening yet. For now, you just don't know. Yeah, this can still happen and can sell. So you just wait. Okay, we break more lows, which is not that important for us. We come back, right? Okay, we mitigate something. We mitigate the OB, we reject, and now we have 2 breakout structures. So what this means for us is we already took out liquidity, so we are ready to sell, and we created efficiency. So if price comes back now to this range, we can take a sell. Yeah, and that's what I meant by not watching this, watching the left for POIs, but rather watching the right, how price is forming. If you followed my analysis before and we said, oh, this is order flow, we would get it stopped out. And that, oh, sorry. And that was my serious attempt to guess what OB or what buy to sell level is gonna hold. It's almost impossible, right? There is something here in extreme on lower time frame that you would have to scan to see what exactly it mitigated. So instead, you can just watch this. After it shows you or gives you the confirmation to start selling, you just check the highest point, what it mitigated, and everything is easier. Instead of predicting.
So the confirmation is that it has to break 2 times down.
So this is our first reversal pattern.
Okay.
And of course, price comes back. We are efficient. Okay, we break. Our valid trading range is this to this. If price gives you enough confirmation here, low time frame. So we are analyzing on M15 now, meaning you would trade M1 to M3. I would prefer M3. And if it gives EPA or like reversal MSU, then you can trade that. Otherwise, you wait for this to be taken out and you enter the same way. Here on M15, you wait for M15 bearish candle. Then you can just go to M. Oh shit. Then you can just hop to M5. Yeah. I hope it's this one. Yeah. M15. So we are here. Yeah, so you can just execute a trade like this, and also the way of refinement I showed you in the last call. Instead of refining trades like this on lower time frame on M1, you can just simply keep the stop loss the same, maybe even up some pips, and refine the trades up. So what I do is I just go to M5, M3, I find the most extreme inefficiency, and I just put a limit here. So for now, the trade is 2R, let's say. I go M15, let's say it's 5R. And if you refine it to the FEG, you have 8R, right? So increase it by 60%. And then just wait, put a limit and trade. And again, after we break this, so here you can trade M3, M1 to M3. But after we break out of here, you again want to increase your time frame when we break out of external structure, right? So you go back to M15 and you start analyzing again. So, you know, oh, we are efficient. We just created a strong high because this was a sweep of external liquidity. You had a key break, a structure. So price can now sell here, sell here, sell here. And all you do is, again, wait for some confirmation.
So Martin, on that entry, why did you wait for a bearish candle on the 15-minute?
That's not important now, but if you trade MSC,
Okay, cool.
you just wait for opposite color candle on the same time frame.
Cool, thank you.
When you say it's not important now, do you mean you're going to explain it later?
Yeah. We'll have one call for entry.
Okay.
So here again, we break out of H1 structure. So instead of analyzing on M15, which was, let's say, high time frame for us, inside that range. So if you wake up, what I mean is, if you wake up here and you want to trade this, all you have to do is you trade M15. Yeah. After you set your bias on high time frame bias was very clear. It was just, we are just gonna target this or this on daily or H4. After you finish that, you hop to lower time frame, and all you have to do is here you trade H1, price comes back internal, you can trade M15, you can trade M15. The moment we break out of here, you go back to H1 and want to analyze everything again from H4. So let's see H4. H4 doesn't give you any information. H4 is telling you, oh, we are inefficient. This guy might be taken out. If you follow H4 analysis or H1, that's up to you. H4 is safer. H1 will give you more trades. So in this case, I would just follow H1. It's worth the risk if we are trading towards something and we know that we're inside the trend. It's not worth it for me to just wait and maybe lose the trade. Yeah. You go to H1, you check everything. Oh, we are efficient. We created a strong high. So next level to trade is around here. And again, you don't have to refine it to anything. But if you want to, all you can say for now is this is liquidity, right? Internal liquidity. And this is OB. By the way, I forgot to mention this. For me, OB is opening of the opposite candle. So this is a sell move, a buy to sell. So I just take the opening of the bullish candle. And if you want to trade rejection, we want it from the OB. So if price later on comes like this and sells, okay, it's better if I show charts. So these are my recent trades. OB would be in this opening, right? Opening of the bullish candle, price comes, gives you a rejection, and you would execute a trade. But we will not take rejections from POIs like this, because then you have cases like this and you just hit your stop loss. This is a recipe for tight stop trades. And then you can just refine the trade to FEG or something like before. And again, you just take the opening price of the bullish candle. Yeah, same thing here. You check what price rejected from. Right. So this is the rejection high. You pull it to the left. From last call, I asked someone, why did we sell? This was weekly FEG. On H4, it doesn't give you any information, except for this being a stop hunt and the OB being here, but that's too big. It's like 60 pips, I think. Yeah, 50, 60 pips. So you have to go to H1 and scan it. what we rejected from exactly. And then you see we had what? Rally, base, drop. So we have some consolidation, and this is the opening of the bullish candle. So the order block starts here, and if price stops into it and rejects, then we can take the sell. Okay, so it's always the opening. Same thing here on H4, opening of the bearish candle, rejection, and you can take the trade. Yeah. Okay.
So Martin, can you just clarify again when you drop down the time frame? So is it when, say if you're on the H4 and you've got literally no EPA and you've got nothing to go with, is that when you drop down to the H1?
The H1 was because the rejection was on H1.
Okay.
So you want it to match. If it's H1 OP, you want H1 rejection. If it's H4 OB, you want H4 rejection. But as I said, there was nothing on H4. Right? This range is too big in the first case. And you see price already tapped into it before. And to trade this rejection, you might as well miss the move, because you would wait for price to get in here, which would be like 100 pips, 200 pips. Then you wait for price to move 200 pips below. It's too big. So you just go to H1, H2 and check the details. Okay, so let's go back to EPA. So this is why this is the OB and liquidity. Price again pushes. Price breaks out of this external range. In this case, you can just hop to H4 if you really want to. But as I said, on H4, there's no information. So you can go to H1. And on H1, we have efficiency and everything. Price is coming back to H1, taps into something, rebalances. And now, you know, price is ready to sell whenever we want.
I have a question.
Yeah.
When you say price is efficient, do you mean it fills the imbalance or it just comes back to
the
low
range,
broken?
to this range.
Only the low that was
Yeah.
broken. Okay, nothing with the imbalance.
Nothing with the imbalance. Imbalance you can use for high time frame objective as well. But in this case, there's nothing.
Okay.
Everything is efficient in terms of imbalance and FEG. So price is coming back. We are rebalancing, and we know price can sell here, 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 here. Then you can hop to M15, M5 if you want to. M15 is my lowest time frame, so that's why. But now you start checking the price. So you see, oh, you have a low, you have a high. We tap into the OB. There's some refined OB on lower time frame as well. But one thing you also notice is there's no liquidity, right? The difference between this move and this move is that we had external liquidity before on H1. In this case, we are just pushing down, pushing up, pushing down. And we know if we want to take a high probable reversal, we need liquidity, right? Before, we already had liquidity ready for us. In this case, we don't. Okay, you can say, oh, we have some wicks here. But for me, for it to be valid, it should be at least structure. So you can go back to M15.
So sorry, Martin, just to confirm, if you have sort of like internal range or external liquidity taken, you don't need an MSU before entry, but if there's no liquidity in the leg or taken prior to...
Yeah, you don't. Price
Okay,
can
cool.
just sell right away, or even if you have a POI, right? Sometimes you have a POI and then you have a huge liquidity pool above it. Then the price can just go up quickly and then go down quickly.
Yeah.
Because there's already liquidity ready. So in this case, we don't have liquidity. There's liquidity visible on F15, but that's kind of irrelevant. And now we start creating liquidity. So we have a break of structure. As you said, we don't trade change of characters and break of structures yet. So you expect this to be taken out. If it doesn't, and we break, we can continue selling. Okay, price takes it out. So we created liquidity, we took liquidity. Let's first possible sell after the next call. For now, we have a break of structure and we are efficient. And price can again trade from anywhere between this, right? So you can refine it to a VG fill, you can refine this to liquidity and bearish candle, anything is fine. So price goes up, fills inefficiency, bearish candle, and you can basically sell. Or you can wait for some lower time for confirmation, of course. What I do in this case, this M15, which is already fine for me, I'll just take this trade, wait for bearish candle. If I want to, I can print a high here or a stop loss here and just hold it till the next range, right? Or you can wait for better opportunity. You can wait for another break of structure. So we are efficient again. Oh, and you see, oh, you tap into here, but it's just a slight rebalance, right? So even though we are efficient and this should be a supply that can give us a move, we will prefer to wait for this high to be taken out. There's also inefficiency, FVG above, imbalances above, and liquidity waiting. So that's how we trade it. And again, we're efficient. Valid trading ranges from this low to this high. And you can trade a bearish candle on M15, or you can just trade lower time frame. Anything's fine. So that's all when it comes to EPA and IPA. I'll check something. December 1st. This we have. Okay. The same thing, for example, here. You can backtest this. You see a big move on H4. You put up a replay button. So you have some confirmation on H4 and you can execute a trade like this, just simple like this, and have a 20 pip stop loss, hold it here. And then of course you can refine it to AVG and you would have like 1 to 10. Or you can trade lower time frame. So this H4 liquidity, you go to M15 and you start analyzing. So what is happening? First we mark structure. You have a break of structure. Price continues breaking. So price broke down again, but now it rebalanced, right? At this point, we are not efficient yet, but taking this trade is not wrong. You can take a trade. It's just a bit riskier. But if you want to be safe, you wait for another break of structure. And now, you know, this is most likely a strong high, right? And you can trade from here, like anywhere here. So price comes back, rebalances. If price has a confirmation, you can trade that. Why not? We also took out some liquidity. I mean, you would have to look into this on lower time frame. Yeah, we are efficient again. You also want to be careful. If price takes out something on the left, let's say this, then there's a big chance of rebalance, of manipulation up also. But that's none of our concern now. So we are efficient. Price breaks. This is our valid trading range again, and we can look for lower time frame entry, or same time frame even, since we already had this structural liquidity here, right? That's another entry. Price rebalances now. Takes out this trap. Okay. And the moment price taps into something suspicious, you hop to higher time frame. Or you can even hop to H1 at this like we break out of H1 leg and you go to H1 time frame. So here we broke structure, we came back to structure and we rebalanced. We broke another structure and we are efficient. Here, and you just follow. So this is valid trading range. We broke down again. This can still be violated. This should be the safe range, right? And here you just trade the same. M15, this was new, so you probably trade M5. But this is all internal, so there's nothing. Again, you can go to H4 and analyze the next move. So let's skip all this. So for example, here, price takes out liquidity. In hindsight, you would see this big move. So you just hop back and you want to trade lower time frame. And again, try to test the concept. Go to M15. I can go. Oh, someone's calling me. 1 sec. Okay. Okay. So first you find a good time frame to trade this. As you can see, M15, you would have this high and this low as external structure, which is not something you want to do, right? You always want to keep your analysis to external structure. And here we would trade internal inside of this high and low, which is tricky because sometimes price can do this and there will be no explanation. Price can do whatever it wants when it's internal. So you hop to M5 and you start seeing this. So first of all, you see break of structure, low, high. If price comes back, we are efficient. Oh wait, what? We have one break, two. Oh, we are already efficient now. So you can look for a trade here, a lower time frame again, or you can execute instantly and just have a stop loss below. That's fine as well. And here you just trade. So this H4 trade, you just target this, or whatever, right? Go to M5. It is all out again. You have a break of structure, price is efficient, and you can keep trading those. Like whenever price comes back, you can execute a trade here and have a stop loss here, and it doesn't really matter. But then if you want to, you just refine it to OB, to liquidity, to inefficiency, which is the safest for me because price usually comes back to those levels, and then just print a trade there, right?
Sorry, Mylan, in that scenario, what was the justification for dropping down to the 15 or the 5 minute?
Oh, the
after?
justification is the structure here is too big. If you wait,
No, I mean, so for when you're on the 4H dropping down to the 15, was that because you've taken liquidity points and you're anticipating reversal?
Yeah. That's
Okay.
always when you tap into something on high time frame and you're anticipating that reversal. You can either take that reversal on the same time frame or you drop down to lower time frame. That's up to you.
Cool. Thank you.
Yeah. But for now, you cannot identify objectives. So that's why I'm telling you to do this in hindsight.
Okay.
You just find a move, whatever. You can try to understand it. But I'd prefer if not. And then,
sorry, are we going to be going over the high time objective and reversals in a later call?
yeah.
Okay, cool.
So that would be everything regarding IP/EPA. And now we'll do equilibrium. I'll just go here. Yeah, do you see my screen? Oh, okay, 1 sec. I'll log in for extra point. Okay, so let's start equilibrium. Now, if you follow EPA and IPA, we know which ranges are valid. But there are still some question marks, right? We have this, and we don't know if this guy is going to be taken out or not. So equilibrium is going to solve that problem for us. If price taps into 50% of the previous range and breaks, it will start an order flow for us. And this high is basically protected. Of course, it gets taken out sometimes, but it will work like 70-80% of the time. So what you want to do is just price just comes back. You can insta execute, or you can wait for some lower time for confirmation and again take the trade. The reasons for this getting manipulated from time to time is usually there's some OB above that is not tapped in yet. Okay, I'll show you a quick example. Okay, let's go to weekly time frame. Okay, let's see here. Okay, this is perfect. So in real time, you would see this. It doesn't matter what time frame it is, it will work the same way. So you'll see, oh, we have a low, a high. Price breaks the low, comes back to 50% of the high, and you would naturally want to see this high continue the order flow, right? This would be the money transfer level, order flow level to sell. So price goes up, everything's fine. You're looking for sells. You take the sell, let's say, and suddenly price takes this guy out. So as I said, one of those reasons can be something in extreme. I hope there's something here. First, we can check daily. On daily, there's not much, right? The wick, but the wick was tapped in already. Go to H4, check H4, and you see, oh, price has this OB that is inefficient, not tapped in, nothing. And we might have been just building liquidity the whole time for it, right? And here, even you see price gives a reaction, starts selling, and it taps into the opening of the OB and then rejects and sells. So that's why I used only the opening, but not the whole thing for POI. Because if you did, let's say here, and price tapped, you would say, oh, so this is a valid break of structure, and you would start selling here, which wouldn't be legit. So that's one reason. Can go to weekly again. This looks fine. Okay, daily. So for, oh, that's double inducement. Okay. Okay. So that's one example of it failing. But I mean, you can go to live chart and you can find plenty examples. And now examples of it working. So I'll just do this. I'm using Forex Play because we cannot go back that far. But something recent. For example, here. So here, how we trade this day. Price is bullish. The reason we are bullish is, again, we tap into something on weekly. So this was a liquidity sweep on weekly. And we are anticipating a pullback at least, right? So we can fill inefficiency, or you can scan lower time frame and just target some liquidity levels. You go to daily. Okay, on daily you had your break of structure EPA. Here, for example, you'd see, oh, price happened to tap to 50% and break. And we already took some internal liquidity. If you go to Ohanda, this will be a bearish candle. So we might go up right away. So you just take this low as protected and just trade this range. So again, we have some liquidity, price stops to 50%, and you can start trading up. Now price broke, took out some liquidity, causing a pullback. One of our high time objectives can be, let's say, FVG fill and rebalance. Now we can hope to H4. The problem with using imbalances and FVGs as trading levels is that price can retest it 100 times or one time and go. And you can never know that, you know, price can do this, it retests one time, two times, three times, four times, and then it goes. But sometimes price just drops and goes. Sometimes it consolidates for 1 month and then goes up. So I don't have any official entry model for that. But what we can do is we can just mark it on high time frame, which was daily, and we trade this on lower time frame. One thing we know for sure about imbalances is that there's no
Milan,
liquidity. Yep.
I have a question. In this case, we can wait stop and like this here. No,
Oh yeah, we can.
okay, thank you.
So you cannot execute a trade on daily, which is the time frame you found the FVG on, but you can execute it on lower time frames. One thing all FVGs have in common is that there is no liquidity, right? If you look inside this leg, I tell you mark liquidity, there's literally nothing. The nearest liquidity, sell side liquidity, is, let's say this, or even this. But in this gap, there's nothing. So if you don't have liquidity, you create liquidity. You start breaking structure up, 1 break, 2 breaks. If you follow everything to the dot, you would start taking trades here or here, right? But I already told you why it doesn't work like this. Here's some stop hunt, so early buyers are out, and then you can hop on lower time frame and trade continuation. So in this case, you just go to H1, and you can trade EPA, or yeah. So here we have. Let's go here. You have a break of structure. Of course, for now, with what we know, we would expect something like this, or something like this, 2 breaks. So we did break, and we continue up. Okay, we come back, rebalance. Now this is counted as rebalance, yeah? This is not counted as EPA yet, just a wick structure. We want to form a high, to form a low, to form a high. Right, so bearish candle, bullish candle, after we break the high. And now we can all agree that this is EPA. We break, we have another break, and we know this guy might hold, or we trade from something here. Then you can use equilibrium. Okay, so there's nothing. And you can anticipate this guy going out. But if you anticipate it like this, by measuring 50%, and you say, oh, so it didn't tap, so this guy will be taken out, you almost sell a lot of trade. You still have to monitor this price action on lower time frame. So now price stops to 50%. Rejects something on lower time frame and buys up. So what you now know for sure now is this low is most likely protected, right? And we started order flow. So in future, when price comes back, you will want price to tap at least to 50% to continue the order flow, but you might as well refine it to liquidity and just leave it be like that. So this is our range, this is our structure, liquidity, 50% is around here. Price takes, mitigates 50%, rejects from the OB, right? And then you can buy. And again, this will be the next level for money transfer for the flow, around 50%. If it doesn't tap, it will be valid until you take out something on higher time frame that can cause this uptrend to change to downtrend. So again, daily level, weekly level, right? But that's it. One more example from recent price action. Let's say here. we had daily liquidity level. While price was moving into that, we started inducing people as well. Fake break of structure. Trap. Inducement. Inducement into liquidity. A real break of structure. Now you can take a trade if you want to, or you can wait for EPA. But you also notice, oh, we tap into 50%, we go to extreme, then we break. So this low will most likely hold while we confirm this EPA. And you don't expect this to be taken out anymore. You can, and while price is going down, you can just put a limit if you want to, right? And it should be a safe trade. So we keep creating EPA, we take out something on the left. You can also see that this is in pretty bad pricing. If you want to, and you trade lower time frame, you focus on RR instead of win rate, then you can take those trades. If you take high quality trades, you always want to take good pricing trades. 50% top, efficiency top, lower time for entry, or just execute, doesn't matter. All right. So we tap into 50%, and next level for us is around here. So we have bad pricing, and we want this low to be taken out. Then we tap. This comes back exactly to 50%. If you want to follow structure correctly, low, high, low, high. You can just do this. And here you have your trading level. So that's from recent price action. I was checking out something on low time frame, on older price action as well. So this February, this is when I started trading swing. So let's say you mastered the bias and you know price action will go down. Yeah. And this is your daily analysis. This is the time frame you start analyzing when you go into charts. So Mr. Josh, yeah, can you tell us what's the next move to trade if we want to short? Oh shit.
We probably want to wait for that low to be taken so we can get.
You can annotate on my screen. What's
we have
next?
to wait. We have to wait here.
Why does?
So you want that. So that's now your range. You'd want another break down to the downside here, so that you can get the EPA range there.
Yeah. Okay. Perfect.
Or you could wait for the range above.
Yeah. So this is our rebalance range, or we can wait for another break and trade this. Perfect. So this you can consider your higher time objective now, and we also rebalance something on lower time frame. I don't know what that was, but there must have been something. And let's say you know that this high is going to be taken out, and you trade towards it. Yeah, we go to M15. And we can start testing equilibrium. So this is February 13th. Then we had 14th. Yeah. So on 14th, we had CBI at 2 p.m. somewhere here. But you can keep trading this if you want to. F15 looks fine for our structure. Here it will be a bit messy, but here it's fine. You just have this high, this low, this high, this low. We have 1, 2 breaks. So we are efficient. Now, you cannot know, again, if this guy is going to be taken out or if you're going to respect this and go up, right? You can execute a trade on lower time frame, or you can wait for this to be taken out and execute it on M15, or you can wait for another break. So most recent break, you can also check if it mitigated 50%, and it didn't. Oh my God. Right. So we can keep playing. Let's say we'll sleep here, whatever. We tap into 50% now, and now we can say this low is safe for us to trade, right? And this will be our next money transfer level. 50%. So we want some reaction here. This works pretty well on news. Sometimes you see me executing without any candle closure, nothing on news, just catching the highest point or lowest point. So I use this basically. This is CPI, and you see pretty much price just tapped exactly into it. And this is also when I started using equilibrium. But I'll show you more examples. So here we tap into higher time frame objective. We have daily rebalance. We took our daily buy side liquidity and H4, H1 buy side liquidity. Every single high here, right? So we are ready to sell, and we can just take a sell on a break of structure if we want to. But just in case, we can just wait for 2 break of structures and trade EPA. So now you'd see, oh, I stopped in 50%. You want to check if there's something above. In this case, you don't really see anything. I mean, like inefficiency or some extreme OB that might be mitigated, but in this case, there's nothing. You have another break. So this high is safe now, and you can trade it. In this case, there wasn't any trade in this range. So we are gonna skip that. But you can use the same thing. So we tap into 50%. This high will probably be protected, right? So this is our next range. Very efficient. This is our value trading range. In this case, I would not rely on this high really. Like I would more likely rely on this high to be taken out, and then trade this OB because again, rally, base drop, inefficiency, liquidity. But it didn't happen. We came back to that high. We tap into 50% of that high. And of course, price the sold. Okay. There's nothing here. But we tap into 50%, so this high should be safe now. And we are gonna ignore this inefficiency for now. When price taps into something on higher time frame, like higher than this, daily, H4, or weekly, let's say this guy, then we can expect this to go and maybe fill the inefficiency. But the way price action is right now, there's nothing that can push prices higher, right? We just have low resistance liquidity, and we know we are bearish. We know there's inefficiency below that we want to fill. So everything's fine, and we can just follow the order flow like this. We have another break of structure. This would be around 50%. So this level, again, if you want to find a POI, it's real hard here. You can just, I don't know, mark this one, but the chance of you guessing it right, you can even go to F5, is pretty low. So you prefer to wait for some price action to form. Price goes up, and before this, you also notice price broke and try to mitigate, right? And it didn't tap. So this you would automatically consider liquidity later on. Okay, so price almost taps into our liquidity, into our POI, into our level. We have this OB, it is supply. So people see this reaction, they can start selling. They see a break of structure. Now they will start selling. So this is what trendline liquidity, OB, whatever, and this is a valid trade, right? They get taken out, we tap into 50%, we continue order flow. Then you can see, oh, so we have an OB here on M15, right? The opening of it. We have a rejection from it. Then we can take it a sell. Everyone was taken out. So we created liquidity. We can see clearly that there's not much, right? So we had to create some more. We continued order flow, and we are trading along with higher time frame flow. So that's a valid trade. Not important now. Then we have a break of structure. before this break of structure, if you follow structure religiously, you'll see, oh, you have low, high, low, high, high, low, break of structure, inducement up, key break of structure, strong high. If you don't want to follow this, you can still continue with the same way. 50% or EPA, and then you trade continuation. 50% tapped, you have two break of structures, two breaks of structure, cheers. And now we're efficient, so you can just take a trade from here. But in cases like this, you know, if you're in good pricing on good high time frame level and you have a clear high time frame target, then I would just put a bigger stop loss. You know, you can put a trade here. Instead of having stop loss here, it doesn't hurt you to add 2 or 3 pips just to be safe and secure the trade. So this is how I would execute a trade. Price comes back to 50%. We continue order flow. So this was the 50%. Let's wait for price to play out. And again, this would be the next money transfer level. And you can use this as long as you're bearish. Yeah. So I'll just quickly play the rest. It's been over 1 hour. So again, we break out of here, but we try to rebalance, but it wasn't deep. So this automatically you consider liquidity. Price comes back, sells off. In this case, it was FEG fill that can cause a pullback or a swing sell, but this level still stands. Of course, not all of those levels are going to be taken out in future, are going to be tapped in future, but if you want to play the safest way possible, then this is the way. Yeah. But nothing is stopping you from taking, okay, in this case, there's no trade, but let's say from taking the buys and then the sells and the buys. All I'm saying is if price goes back to that level, you can take a high probable trade. And price did. So in this case, we go to daily. We go to daily and we see, oh, so price filled FEG on daily. This is our high term objective now. That can cause a pullback on daily, which would mean that this downtrend on on M15 is not valid anymore. And we want to see this as an uptrend. If you want to trade, we want to trade M15 EPA or M5 EPA if you want to, or H1. And you also don't want to see these supply and demand levels as your POIs, right? Gives a reaction, then bam, you would hit a stop loss. So again, price goes, create some liquidity, some fake reaction, we take out liquidity here. We have a break of structure, so people are starting to sell again. And of course, money transfer level, this is MSU, and you can use it the same way. So you can enter on at the top, or you can just wait for break of structure, another break of structure. We have EPA, you check if this was 50%, it was. So you can, I don't know, just refine it to this and put a sell here. Doesn't really matter. Right? You can just hold it. Let's say like this.
Milan, how you saw it's a fake reaction?
Huh? Yeah.
How you saw it's a
This was
fake
Asian high.
reaction here? Yeah, here.
This is Asian high.
Okay.
We have order flow right above. So the timing is lining up. We want this to be liquidity, right? Asian high liquidity. Then also, if this is external, we want a double sweep. So you want something like this.
Okay.
But
Okay.
if you go up, this is, pay attention, if you go up like this, and we take out some liquidity, and we start selling down like this, like slowly, slower than we went up, then this would be a weak high.
Okay.
Yeah. So that's it. Then of course, break of structure, 50%, another level. So we had a sell, then you had some manipulation, this was news. Again, this would be something unexpected and unpredictable. Maybe there's something on lower time frame. I still remember this day, but up to this date, I wasn't able to figure out what it mitigated exactly. So be ready for that. There are some moves that you cannot explain. That is just manipulation. But also you have to take into the account that on some other brokers it was a manipulation like this, on some it just mitigated this, right? So it's very subjective. Here we can actually even go to H4. So you say this is a stop hunt, unexpected stop hunt. This might create a strong high for now because you're still bearish. We are probably just feeling inefficiency, like imbalance, or you can just tap 50% and go. But if you want to trade now, you follow H4. You have H4 MSU, break a structure here. So if you break another one, oh, we are efficient actually. So if you get lower time for confirmation, we can take a sell. If you don't, we don't sell. So you know, oh, 50% was not tapped, and price can take this guy out and sell. So if you expect this, you would miss the trade. If you don't, you can look for a lower time frame trades if there's any, right? And you will notice, oh, price again mitigated 50% here. So the next level might be this, and we can trade from here. We can also use this, even though this didn't create order flow, but it is a strong high. So this can be, let's say, continuation level as well. We have 2 levels now. Again, price breaks, we create new low, new high. We are efficient, so price can sell here if it wants to. Okay, you see, oh, so we tap onto 50%. We confirm a strong high or a protected high. And if price comes back now, we can take a sell instead of waiting for this high to be taken out. So let's say price does take the sell, and we fill our high time frame objective. Weekly FEG, H4 FEG. So what this means for us is we are anticipating an uptrend, right? A temporary uptrend on H4, H1. And the last thing we want to do is use this supply because it broke structure and whatever to take a trade. Price comes, trap you, gives a reaction after trapping you, comes to order flow level, but also note that these levels are still traps, okay? But you can take trades in those, but you know it's just gonna be temporary, just a pullback trade. So one pullback from the level, second pullback from the same level, right? And you can use this on any time frame. So we had a daily MSU. Then we had some news here.
Milan, I have a question. This
Yeah.
reaction, it's because of this week?
Oh yeah. Yeah.
Okay.
So
It's a money transfer, yeah?
and you just expect a small pullback here.
Okay, and okay. Thank you.
Okay, so I don't know what happened here. Let's go to daily. Okay, so we are not bullish yet. In this case, you'd have to really refine it to extreme to see what's happening. Or you just have a break of
You can see
structure
on the
and
4
wait
hour.
for EPA. Huh?
You can see it refined on the 4 hour.
On 4 hour, you can only see this. But maybe H1. Right, yeah, this OB. So maybe price needs to tap into 50% of this and continue the order flow. But this is just, you know, playing. You might miss big moves because of this. Okay, this day was nice too, 14th of March. Let's check this out.
But all this will make sense when you put the liquidity in, right?
So for example here, okay, it doesn't matter what it takes from the left here, but let's say we have a build-up, we induce people to buy, and we trap them, we have fake reaction, second reaction. Let's say it taps into something, I don't really see anything, but let's say it does, and you want to buy. So M15 structure is a bit big here, right? It's here, here, and it's like, I don't know, 20 pips, 25 pips for you to trade. So you'd wait for 25 pips break up, then 20 pips pull back, and the day would end before you take the trade. So you can just hop to M5. But if you trade M5, you have to be more careful. Yeah. So the first thing you do, you'll start marking structure. High, low, break of structure, not a trade yet, right? If price comes back here, you don't want to take this. You want something like this or like this. Okay, price goes up and breaks up again, but it's not efficient. So taking a buy here is not an option. Price comes back, rebalances, taps into OB and rejects. Even though we are not efficient yet, we would be efficient after we break the high. We can anticipate the efficiency, right? So this can be a risky trade. But let's say we want to play safe. First, we make sure price down to 50%, we start the order flow. Then we have an MSU, FBOS, inducement down, into OB rejection, into rebalance, and then into key breaker structure. Now also know that we are bullish. So all supply levels or all valid supply levels are just traps. So this would be a trap for you. We change it to red, a trap, right? You take a sell, you see 5 hours of profit, then you get break even, you're stopped out. Next one, liquidity pool taken out, strong high, demand, supply, liquidity pool, whatever, and that's another POI, another trap for you. But we ignore all of this. We are just aware of those levels that it might cause a pullback, but we just follow the order flow on buy side. So
Where do you target?
50%, bam.
No, I mean the target. Where's the
The-
target?
Target for what?
Target
For
for
buys?
TP. Yeah.
Again, you just go to H4 and you follow the context. So it can be a liquidity on the left, it can be AVG on the left, whatever. That's not important now. And you can just continue like this. 50% you continue the order flow, and when the order flow ends, that's your next money transfer level. Right? So it would look something like this. Price comes back. And everything is efficient now. If price will ever come lower, let's say, okay, this broker is different. On FXCM, this wick didn't tap into it. It just was here. Then the next tab was here. And if price ever breaks lower than this, then you should consider all of this efficient and just target this. Yeah. But in this case, the context was bullish. So that's it. So we went through all concepts I wanted for today. If you want to, if you want to test it, I already told you how. You just go to H4. Now you can start checking the high time objective. You can practice it before the next call when I'll go into detail. But now all you know is press tab on something. You can try to identify that something. So in this case, it would be this liquidity. And then you can just test these concepts on lower time frame on the whole, like when you know for sure that we are trending in one direction. Here we have daily rebalance. Go to daily. So we are rebalancing this. We had some sort of stop hunt on lower time frame, and you can start analyzing this up move, right? Or you can even test it here and whatever. So does anyone have any questions?
Can you draw an MSU?
Who was that?
The rod.
The rod. Like on chart or this?
Yeah, like that.
Yeah.
So it's like it has to break one time and then take out liquidity.
Yeah. But it's only one structural high. If it breaks two highs, it's not valid anymore. So sometimes you'll have something like this. Fake break a structure, context is bearish. The price does this. So it's not valid for sell anymore.
Because it broke 2 times.
Mm-hmm.
Okay.
Can you explain the trade you took today, maybe, or is it not in our
Today?
advanced? Yeah.
Today, the trade was very bad. I mean, all the trades in these ranges are bad. Let's see. It was simple. There was EPA and liquidity. You follow structure, low, high, well, whatever happened here. Not important, left inefficiency. You don't trade this. Break, rebalance, efficient, we can trade. Break, MSU, right? So this sell would be valid, but does anyone know why this sell is not valid? Harun. Wait, is he here?
Yes, it's me.
Oh, you're here. Okay, why is this sell not valid?
Why is not valid? For me, I think it's not valid because the price takes too high here. Look, because if we follow the structure, here we are if boss, here we are inducement, and
Yeah.
here we have sorry we have K boss. So the price, I think ca- yeah, but the price he go, yes, il est parti. He go more
Okay, but you cannot know this in real time. If I see this in real time, it would look like a valid trade to me. Right? We are efficient. We have EPA. So, we have IPA. We rebalance IPA. We have ILQ. So the sell is valid, right? But
Can
the
you maybe
reason,
say you didn't have
okay.
50% of this one, and you can like target this liquidity, and you can go from right there, maybe?
okay, but that would be subjective because why 50% of this one but not this one?
Okay, so this,
Yeah.
yeah, okay, yeah.
So
I
that's
don't I
that's
don't sound like
question marks.
that.
The
Okay.
reason is simply because you took out this. So expect a pullback. And you don't want to follow the EPA and ILQ MSU anymore, right? You know that if price stops here, it will create a temporary uptrend, and everything that you use for continuation trades will become traps. So of course, you don't take this sell. You
So
just took a weekly low.
so every time it takes out transactional, you have to wait for the pullback.
Yeah, it doesn't matter if it's transactional, external, or FEG fill, but every time you tap into something like this, you don't trade it. Yeah. So then, of course, I wait a bit. I see, oh, so I can wait for something higher and take a risky sell, or I can wait for structure to print and just trade a simple price action. So you had a MSU sell, almost a key boss, then you get stopped out. Price goes back to efficiency. Very efficient. Then I have a break. So now I see, oh, so we just print a strong high, we are efficient, then why not just take a sell, right?
Yes, exactly. My friend takes the same trade of this today.
Perfect. And then, of course, you partial here on another breaker structure. And I mean, you can full TP whenever you want. Go to daily and look at this as a daily trend. So here, I don't think we would pull back. If we go up now, I think we are bullish. I think we just target this as safest, right? But it depends. And the same thing with traps. is the same here. So for Mr. Harun, don't take trades when we tap into traps at an objective. Right?
Thank
These
you,
two
bro.
levels.
Thank
This
you.
is why I asked last time
Thank you.
to explain me the buy here. The same thing. On weekly, we fill AVG, and you cannot use MSUPYs like this. You would get taken out. So you want to take buys, or you want to trade something like in better pricing. Same thing we had on Friday last week. So let's say here, I'm gonna show you guys how I traded this, yeah? Just a sneak peek. So we have daily liquidity level taken out. We can all agree that on daily, it's just a singular level, a structural point that looks pretty good. Then you go to lower time frame on H4 and you see, oh, that's a liquidity pool that lines up with that daily. So that's why I chose this level. Before we tap into that, we also had FBOS inducement, KeyBOS. So we are expecting this low to be strong, right? Okay, so while price is going down, we are looking for buys. Go to M15. Oh, we can go to H1 first. Our high time frame objectives can be IFC, meaning inefficiency, which will mean APG, and IPA. Second can be liquidity. Third can be money transfer. Drop-based rally, rally-based drop, drop-based drop, rally-based rally. So all those are fine. In this case, is there any liquidity? No, there isn't, right? If you look at this whole leg, there's no liquidity. So we can delete this. Okay, give me 1 sec. Okay, so there's no liquidity. That means we have to create some liquidity. So we start building up. We start inducing people to go in the market. We give them a fake reversal that is pro trend. That's all good. So if build up, inducement, this becomes our trap.
Prop, yeah.
This would also be SLQ for Harun, whatever, liquidity. Price goes in. And we know this low is going to be taken out, right? So this will be a trap. But most of the time, both traps and high time objectives give fake reactions. So, I mean, a high time objective doesn't give a fake reaction. It just changes the whole trend for short term. But a trap gives you a fake signal. So you can go to M15 and how he traded that day. I'm going to guess you have a break of structure, EPA, strong high, 50% mitigated, fake boss, inducement, strong high, and we have a supply, right? That is valid for us to trade. Something like this. But because this is a trap, you don't want to take any trades, or you don't want to trade like nothing is happening. Like you don't want to trade continuations as if you are trading, let's say, a huge leg of AVG that is not stopping the price to go down. But in this case, you tap into something and people will try to buy up. So we give them a fake reaction. They have a break of structure. You guys would see a boss, EPA, and you guys would buy, right? And we just go into the trap and then price sells. So you see, it takes exactly the the high that you would consider a strong high. And this applies to most of the moves if you want to study it. So yeah, trading is easy. Anyways, does anyone have any other questions regarding today's concepts?
So today you were only supposed to know the EPA and the EPA.
Yeah, EPA, EPA, equilibrium, and yeah, there is no homework. If you study or not, I don't really care.
Mhm.
Yeah. What will be important is next goal. We'll go through
Ah,
liquidity.
Milan, yesterday you told me equilibrium it's risky.
Oh, it's not a good high time frame objective.
Ah, okay.
So if you start selling here, then you don't want to use, let's say, if price taps into here, sell to buy. If price taps into here, you don't want to use this level.
Okay, I
Yeah.
understand.
You want to, let's say, this guy to be taken out. This will be the nearest trap. Give it some pullback and then just sell.
So all this EPA and structures that we learn, and now MSU,
Yeah, it's only
Okay.
pro trend.
yeah, you cannot use it if you don't know the liquidity, right?
Oh, you can. I'm just saying you cannot use it if it's counter trend. Here we had an uptrend.
Okay.
You finish that like you tap into something, you go downtrend, and you don't want to use EPA from the left. You don't want to use equilibrium from the left or anything like that.
The
Guys
internal
can, of course,
internal EPA. You don't want to use the internal leg on the left.
what do you mean?
Yeah.
Annotate on my screen.
After you break something here, you don't want to use this.
Yeah, you don't want to use
All this is liquidity.
exactly.
Okay.
So let's say if there's this in the middle of here and it wasn't mitigated, you don't want to use this as your rebalance, right? The only rebalance for counter trend is FEG. So if price fills this, you can expect some sort of pullback and trade up. That's about it. Also, one more thing you can use is you would see this as drop, base, rally, and this would be money transfer. So that's why I'm expecting a reaction here. The price taps, gives you a small reaction. If you trade M15 here, right, and the moment price stops here, you keep selling here, you're gonna hit the stop loss for sure. So again, this downtrend is done, and you continue using EPA, but for uptrend, right? And then price might tap into something like this on H4. So this is M15 structure, but imagine this is H4 now. So you want to zoom out. If you want to take sell, you want to zoom out to higher time frame. So F15, I will just jump to H1. If H1 doesn't offer anything, I hope to H4. And on H4 structure can look something like this. Right? So you want to go to H4 to look for sell. And if you want to look for buy, just jump on M15.
Okay.
So I guess everything should be easy now. And that's the reason why I see some traders that use the concept I'm teaching you guys. They just learn from leaked algo hub. But the trades on the price just does something like this. Price stops something and they keep pulling it blindly without knowing why it's failing. But you guys know, so that shouldn't be an issue. Okay. Now I would recommend to watch the chart live or trading in hindsight, just checking the trades. Tomorrow I'll post a replay of this on Telegram. And the next session, if you guys want the next session this week, I can only do it on Thursday and Thursday morning for me. So it would be like after midnight for American people and afternoon for Asian people. Or you guys can wait till next Tuesday and we'll cook liquidity during the next week. So just write in the Discord what you want and we'll decide. Have a nice day.
Cool. Thank you.
Thank you, bro.
Bro, how can you get added into the Telegram group?
Huh?
How can you get added into the Telegram group?
Yes, me too. I don't have
Okay, I'll invite you.
Okay, thanks.